Hi everyone, welcome to another Weekly Forex Forecast for the week ending March 13th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to discuss the Euro USD, the Pound USD, the Dollar Yen, as well as the New Zealand dollar versus the US dollar. And we're going to wrap things up with the Euro versus the Japanese Yen. We've seen some massive moves recently, and I don't expect that to change, especially for pairs like the Euro USD and the Dollar Yen. So let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. So first up, as always, we have the Euro USD, and I want to start with the weekly time frame because you can see how this pair has broken out of this massive descending channel that dates back to the 2019 high. So this is the 2019 high back here, and you can see that we have this well-worn descending channel that really has directed our bias ever since the pair retested this bottom, tested the top, and then just recently retested that low around that 108 area. So we've had this daily and weekly close now above this channel top, and therefore this breakout is confirmed. So if I move into the daily time frame, you can see where we had this confirmed breakout on Thursday, and I talked about this when the pair was rallying up here and closed above this 110.75 area. I then talked about it through here where I said, even to members, that constant pressure on a key level like this signals an imminent breakout. And sure enough, Thursday closed above that 111.70 area, which is the top of that channel we just looked at. And furthermore, Friday retested that 112.10 area, which was this high right here. So notice how we had this high and then Friday's low tested that area. So we did see some profit taking up here into the weekend, but that's not surprising given this massive run that we've seen from the euro over the last couple weeks. So unless this is a false break, in other words, unless the euro closes back inside of this channel down here around 111.70, I do favor a move higher this week up here into this 114.50 level that I talked about last week. So if we take a look at the weekly time frame again, you can see how this 114.50 area was a key factor back here. So this is 114.50, and notice how on the weekly time frame we have a ton of highs back here. So this was the top of a range that persisted for several months. So 114.50, in my opinion, is going to be incredibly significant on the way up. Furthermore, if I draw my Fibonacci levels from this high up here down here to this recent low, you can see where the 38.2% Fibonacci level lines up right with 114.50. So again, as long as the Euro USD stays above this 111.70 area on a daily closing basis, I do favor a move up into 114.50. And just keep in mind too that we could see a bounce from 112.10 if we do get a move that low. However, I would prefer to see consolidation a bit higher just because I wouldn't want to see the euro give up all of Friday's gains. But in these markets, we have to expect the unexpected. So a pullback into 112.10 or even 111.70 shouldn't be out of the question. But I do favor the euro higher as long as it's above this area on a daily closing basis for a move up into 114.50. Next up, we have the British pound versus the US dollar, and this should be a pretty quick segment because, in my opinion, the pound is indecisive right now and choppy. It's not one I want to trade simply because we have a few things happening, but there's really not a defined pattern that's tradable, at least for me. So we still have these two levels in play, the bottom of this 2019 ascending channel, and then we also have this November 2019 trend line. So this 131.70 area could serve as resistance for the week ahead, while support remains that 127.70 zone. Now, at the same time, I do realize that there is a descending channel here. So if I use this high back here, which was the December 31st high, all right, you can see where we do have this descending channel in play. However, notice how messy this chart gets, because even if we get a break above this descending channel top, the pair still has to deal with 131.70, which is the intersection of several highs back here, as well as the 2019 channel bottom, and also that November 2019 trend line. Okay, so there's a lot happening here. And in cases like this, I tend to step aside, give the market some room to work itself out. Furthermore, pairs like the EURUSD, the dollar yen, and even the New Zealand dollar that I'm going to talk about shortly are setting up in a much more favorable manner, in my opinion. So the GBPUSD is one I'm going to ignore for now and see what sets up in the coming days and weeks. The dollar yen has played out beautifully for us, and this is a perfect example of what a false break can do. So if I move out to the weekly time frame, you can see how we had this recent break above this multi-year wedge pattern. So this close right here confirmed the breakout. However, as I wrote several times in the blog, this retest of that wedge top was far too aggressive. So notice how we had this massive rally and the dollar yen completely collapsed and retested that level right away. Anytime you see this, rather than a rounded retest, there's a good chance that this is a false break. So I even wrote that a close below 109.80 would confirm the false break and send the pair lower. This candle right here closed below 109.80, and as you can see, the dollar yen is off of that level by hundreds of pips at this point. So this is a great example of how a false break like this up here can also be a signal to get long or short. And in this case, because it was a false break to the upside of a pattern, it means that this close right through here presented us with a short opportunity. Now, here's where things get a little tricky for the dollar yen. If you notice, the bottom of this wedge pattern is right around 105.30/40. All right, so last week's close was 105.36. So it's going to take, in my opinion, the first 24 hours of this week for us to determine whether or not this was a breakdown or if the bottom of this wedge is intact as support. I tend to favor the idea that it's still intact as support and that we could see a slight bounce from the dollar yen this week. Now, keep in mind that that 106.80 area is now resistance, and you can see how 106.80 was support back here. It then flipped to resistance and was support once again through here. But all in all, I'm still short here, and I continue to favor selling the dollar yen, especially if we do get a close below this wedge support somewhere around 105.30/40. And just like I mentioned last week, and I pointed this out in the members only video, if we do see a break below this wedge support, we could very well see a run at these 2016 lows right around that 100 handle. Next up, we have the New Zealand dollar versus the US dollar. And I want to start with the weekly time frame here because as you can see, we have this massive terminal pattern that could force the market's hand over the coming weeks. So this trend line extends from the 2000 lows, and you can see where the New Zealand dollar just tested that level last week. Furthermore, we have another multi-year trend line that extends from this high up here. We then have this retest and also this retest here. So this pattern is going to force the market's hand in the sense that the New Zealand dollar is going to have to decide whether it wants to break higher or lower from this terminal pattern. And while we're here, I do want to point out something that happened on the weekly time frame last week, and that is the bullish engulfing pattern that formed last week. So notice how the bottom of last week's candle is below the previous one, and the high is also above that previous candle. So this candle right here fits inside of last week's range. All right, so this could be an indication that the New Zealand dollar wants to head up here and retest the top of that multi-year trend line. And if I now move into the daily time frame, you can see where the New Zealand dollar also closed above that 63.25 level last week. So 63.25 has been a key level for the New Zealand dollar for several months, and last week's close back above that level means that 63.25 is going to act as support for the coming week. Now, we could see some resistance at these recent lows. However, I do think that a move up here into 64.35 and perhaps even 64.90 could be in the cards as long as 63.25 support stays intact on a daily closing basis. If we see the pair close back below this area, it would indicate that this was a bull trap or a false move and could expose those recent lows around the 6200 area. But as long as 63.25 stays intact as support on a daily closing basis, I do think we could see a move up here into 64.35 and perhaps 64.90. But do keep a close eye on this multi-year terminal pattern, because in my opinion, this is the one that's going to force the market's hand and produce the best opportunity over the coming weeks and perhaps even months. I discussed the euro versus the yen on Friday, noting how we have this sideways movement between 118.50 and 121. So if you'll notice, 118.50 has served as support for several weeks, and 121 has served as resistance. Now we also have this recent break below this ascending channel at the end of January, and in my opinion, this channel signaled consolidation within the broader downtrend that began at the start of 2018. One thing I pointed out on Friday, though, is that if you are looking to take advantage of yen strength, the euro yen isn't the best place to do that. And that's simply because we've seen a strong euro as well as a strong yen. So we have a bit of a stalemate here. However, if we do see the euro yen start to break below 118.50 this week or next, we could see a move down here to 116, which was the 2019 low. And the reason I'm favoring a break lower and not higher is simply because we have an established downtrend here and a break below this ascending channel, which tells me that the bearish momentum is intact. So if we do see a move below 118.50, I'll be looking for a move down here into 116. But again, if you're looking to play yen strength, I do think that the dollar yen is the best place to do that, simply because we have a strong yen and a weak US dollar. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.